Hey everyone, hope you're doing well. So I just want to talk to you about a quick article that I just read, Bitcoin to replace gold. Why don't we get into it really quick here? So Bitcoin set to replace gold, says Bloomberg strategist on Brentton Woods' 50th anniversary. Let's zoom in here for you guys. Excuse me. The statement appeared as a takeaway from Blockworks Brentton Woods, the realignment conference that gathered economists, macro analysts, and investors to discuss Bitcoin. So I thought this was an interesting article, so I wanted to go over this with you guys, see what you guys think. Bitcoin is replacing gold even as the United States regulators attempt to disrupt its advance, said Mike McGlone of Bloomberg Intelligence on Monday. Digitization of money and finance behind the Bitcoin's market superior growth against gold, noting that the same factors helped the U.S. dollar gain dominance rapidly and organically over the precious metal. So here we're looking at the spot gold has fallen more than 99% against Bitcoin since August 2011. Yeah, I mean, gold is down, I think, 5-10% from a decade ago compared to where it is now, and obviously Bitcoin is up however many 100,000% it is up. Brentton Woods is a popular among economists for hosting the United Nations Monetary and Financial Conference in 1944, which later led to the obligations that the United States, Canada, Western Europe countries, Australia, and Japan would tie their currencies to gold. As a result, the new monetary establishment earned itself the title Brentton Woods System. But obviously, on August 15, 1971, United States President Richard Nixon took the dollar off the gold standard. Many economists hailed the move, calling upon John Maynard Keynes' benchmark opinion that gold standard was a barbarous relic. And then we see Nixon here. Latest Brentton Woods, the realignment conference, served as a metaphoric homage to the end of Brentton Woods' system while focusing on emerging financial assets like Bitcoin that threatened to displace the dollar hegemony to become the next global reserve asset. In doing so, Bitcoin has directly challenged gold's position as a traditional competitor to the greenback, which McGlone stated is already happening. We've obviously seen that with the chart on Bitcoin and gold comparison. Bitcoin is way up, gold is way down. Mike McGlone tweeted, digitalization of the money and finance is happening rapidly and organically. The dollar is gaining dominance. Bitcoin is replacing gold, and U.S. regulation is unlikely to disrupt its advance. These are our key takeaways from the Brentton Woods, the realignment conference. Complementary bull market Bitcoin dollar. Obviously, we're seeing the targets here in the price chart. 5 decades of dollar dominance. Princeton University economist and economic historian Harold James argued in his July 2021 article that digital technologies are driving new monetary revolution that could end the greenback's global primacy altogether, hinting at a role of crypto assets such as Bitcoin and Ethereum could play in reshaping the global economy. We're seeing that narrative take place a lot lately, obviously in the past couple of years, that Bitcoin is the new gold. In detail, the so-called Nixon shock in 1971 led to double-digit inflation in the United States, prompting the dollar to fall more than 50% against the Japanese yen and the German Deutschmark. But neither currency could replace the greenback in the race to global fiat hegemony. So we're seeing the price of the dollar, Japanese versus UN foreign exchange rates, and then obviously continuing to fall down the path here until 2021. The dollar posted strong recovery rallies in the first half of the 1980s, and it posted similar upside moves in the second half of the 1990s during the dot-com boom, and busting greenback also walked unharmed through the 2008 financial crisis. The government obviously pumped in a lot of money then, and COVID-19 led economic distress, and obviously the government pumped in more money. Dollar shock ahead, but why did the dollar survive? Bloomberg opinion columnist Neil Ferguson provided 3 reasons in his latest report. First, the greenback received backing from the Federal Reserve's higher interest rate policies to reset expectations. Then we have a chart here. Crude oil and price in Bitcoin is obviously going down over the years. Second, liberalized capital markets led by the boom in the eurodollar and petrodollar markets boosted the dollar's international utility, prompting foreign central banks to use it to execute international trades. And third, the United States government's power to impose financial sanctions on countries it deemed unruly to the White House's policies, especially in the wake of the World Trade Center attacks on September 11th, 2001, made the dollar a financial weapon. And that's one of the fears that the government obviously has, that it's going to lose control on other countries, basically. Do this or you're not going to be able to use the dollar, or you're going to do sanctions on you. It expects to grow higher after the $1 trillion infrastructure bill that the Senate just passed. The Congressional Budget Office reported that the stimulus would expand the budget deficit by another $256 billion within the next decade. And then, meanwhile, another package worth $3.5 trillion, which focuses on poverty and climate, is expected to have been enacted by the end of this year. As a result, James noted that rising deficits had reduced the dollar's upside prospects in global markets. He wrote, "Some dangers are already visible in the treasury market, where there have been liquidity strains in 2020 and a weakening of the foreign demand. New money, therefore, may be ending the long period of dollar's hegemony." Bitcoin battles gold as an alternative to the dollar. The Federal Reserve's loose monetary policies have resulted in supersonic price rallies in the Bitcoin market, and so much so that the strong moves upside have beaten gold, a traditional hedging asset. Bitcoin rose from 3,852 to 64,000 against rising U.S. deficit. Sources, TradingView. You can obviously see the chart of how that happened. The Pomp Investments partner, Anthony Pompolino, a longtime advocate of Bitcoin, said in a note to clients that if one holds their wealth in dollars, bond, or gold, their investment will yield negative real rates of return. And that's true. We're seeing that currently. You essentially are left with Bitcoin or equities, which leads you to consider an allocation to Bitcoin given the high degree of volatility that will likely serve to outperform equities over the long enough time period. Pompolino's statements appear despite potential regulatory challenges for emerging digital assets, as McGowan pointed out to his Monday tweet. The crypto industry has faced a wave of attacks from Treasury Secretary Janet Yellen, Senator Elizabeth Warren, and Gary Gensler, chairman of the Securities and Exchange Commission. We've kind of touched on those points a little bit in the past week or two. But McGowan noted that the hard regulations would not be unable to disrupt Bitcoin's advance against gold. Additionally, Liam Bussel's head of corporate communications at crypto trading service Banexa noted that the U.S. regulations do not wish to stop Bitcoin. They want to protect U.S. investors from fraud. So that's kind of interesting. We're seeing that narrative take place a lot, with where Bitcoin is being considered the next gold 2.0. And we may see, obviously, the dollar, maybe, I don't know, next 15, 20, 30 years, who knows when, might be dethroned from its supremacy. So let me know in the comments down below what you guys think of it. I thought this was interesting that this is happening, and a lot of people are talking about it. It's obviously something to keep an eye on if you're investing in the markets. Obviously, do your own research as always. And yeah, let me know what you think in the comments down below, and we'll catch you guys in the next one. Have a good day. Bye.